right, Robert. So I think this is the new reality for you, for me, for everybody we know, for Real Estate Chat viewers who have liked and subscribed to Real Estate Chat with
Jonder Perez.
and Robert E. The reality of higher rates for longer and gasp, maybe even forever. Robert, thanks a lot for sharing this article with me. Because it talks about higher for longer, maybe forever. Bank of Canada Deputy Carolyn Rogers. You can Google her to find out more. Deputy says ultra low rates may not return forever. And there's lots of reasons for this, all right, Robert? So all of our real estate chat viewers who are watching this and who look through the description and click on the link to this article, basically it's not the Bank of Canada's fault. It's out of their control, right? So a lot of different things, the geopolitical risks, all these things that feed into inflation, geopolitical, war in Ukraine, increasingly bifurcated. Sorry, you know what, Robert? I need your help reading this.
Divided
Bifurcated.
into two paths.
Okay, divided into two paths. Global trade order both have the potential to continue to raise price for goods. For example, structural issue at play is baby boomers retiring, so that removes substantial part of labor capacity from the systems. Retirees tend to shift from saving to spending, adding demand into the economy. So all sorts of things. But you know what? There's good news because apparently Canadians are already adapting to higher rates. So if you're paying a lot of money for your mortgage per month because of these interest rates that you're paying into your variable mortgage, well, guess what? According to this article, you've adapted, so you must be doing fine. You're probably okay with the high food prices, all the other costs that you're paying for goods and services, and yet more adjustment is coming. So, Robert, forever is a long time, and this is what the expectations are of Canadians is you're going to be paying this. And you and I were talking earlier about things such as universal basic income coming to Canada and all these other factors that are meant to equalize. I guess it's the solution that isn't in Bank of Canada's control. Robert, what's your take on this?
Okay. Everything is compared to what? So higher for longer dash and maybe forever. Bank of Canada says ultra low rates may not return. Now, what that is about this 0.25% bank rate. Right now it's at 5.25. So that rate should never have gotten below 3%. So the too low is gone forever. Now, we got used to too low. We got used to having variable rate mortgages at less than 1%. We got used to 5-year mortgages at 1 point something or other, 2 point something or other. Those are gone forever, yes. Traditional first mortgages in Canada are the rate of inflation plus 4%, because if you're lending out money and you're putting it at risk, then you want 4% on that money. It's secured by the real property plus inflation, because otherwise you just, inflation is eating it up. So there's a program in place is to change people's way of thinking, to defamiliarize themselves with 0.25% as the prime bank rate and 1%, 2% as mortgage rates, because the machinery doesn't work at that level. Imagine that you just inherited $7 million from your great aunt that you didn't know was coming, and now you're going to put it out, and they say to you, well, your choices are a checking account at minus 2%, because it's minus 2%, that's the rate. Or you can put it in a GIC for 1%, or you can put it in a speculative stock market and you can get 3%. You see, those are all lousy. What if inflation goes up? I lock myself in and inflation eats it all up. So changing people's perspective on what things are. Real estate. Real estate is price and monthly payments. That unless somehow you just paid off the last nickel, you don't have a mortgage anymore, or unless you've just inherited this huge amount of money, most people have a mortgage. When I say most, I mean 70%. People who've bought in the last 10 years probably have a mortgage. People who bought before that, no, they paid it off. They lived there for long enough. Then just the automatic saving plan, debt retirement, that is amortization, has paid it off. So they don't have monthly payments. Somebody that started a business, put a loan on, he's hurting from it because he put it on a variable rate because he thought it was cheaper. And now the cheaper is the most expensive. And oh, gee, it's all messed up. So the deputy bank governor was on TV talking about the notes that they'd made on their meeting that resulted in the announcement to pause that came out, whatever it was, 9 days ago. So what they're trying to tell you, and these headlines are very, very good, very, very good. Rates are likely to stay here. Yeah, okay, not 5.25 bank rate, not 7% interest rate, but 375, 425 is the bank rate, which is down a point, but it's not what you're used to. We're used to much less than they were at 0.25%. Outside the Bank of Canada's going, yes, it's affecting the whole world. Just like the whole world was affected in 2008. And so that's why interest starts got crushed down to where they were in 2008, because the whole world nearly fell apart. And so they did these crazy things that kicked it down the road until now. Until now. So now they're paying for all the mistakes they made in 2008, all the kicking down the can, all the quantitative easing of creating money out of nothing. No bond, no nothing, just they're trying to put the genie back in the bottle, and they can't do it. Humpty Dumpty fell off the wall. They can't do it. So there's going to have to be a new something come along, radically different that nobody's thinking about. And in order to do it, the existing boys have got to admit that they were completely wrong and they misled the public. And the people are going to be really, really browned off, saying, "You mean I went through all that pain because you made a mistake and then wouldn't admit it?" And they want to admit that they didn't want to admit it. They just say, "Well, it's beyond our control." Anyway, so that's why it's the first headline. Canadians are already adapting. Yes, if you have to choose between paying your rent, paying your hydro, buying a new car, not buying a new car, walking to work, that's what's called adapting. Now, you may say, "I'm losing the quality of my life is going down." That's adapting. It's just the grown-up way of talking about pain and suffering. More adjustments coming. So any optimism that you see, stock market went up today, 400 some points. They're sucking you in. So suckers rally. What you want to do in real estate is find an affordable monthly payment, which means you can qualify for it on the way in. You can keep that thing throughout its whole term. Your job will be good for that whole term. So buy something that's as good as you possibly can get, that you will enjoy living in. Your kids can go to the school. You can get to work. The five rule of fives. What do you do? 5 times a week, 5 times a month, 5 times a year. Those are the things that you satisfy with the location. And we're going to have a resurgence of inflation. That's how the prices are going to come back up. They're going to keep interest rates down somehow because people can't pay 7%. They can't pay 2% on top of that. We're going to have 4% inflation. Prices are going to go down a bit more. Maybe it's going to take 2 years, and then they're going to recover because happy days will be here again with increased income, reduced interest rates, and prices can go up because the interest rates pay for it.
Definitely looking for that. So totally different message from low rates forever. It's high rates forever, or not low rates forever, low rates for a long time, high rates forever. But the good news is we will always adapt and we will figure out a way. So real estate chat viewers, if you have any questions, comments about this, tell us how you're adapting and tell us what new realities you've faced and how you're handling it. And again, we look forward to chatting with you more in real estate chat. So if you have any questions, comments, ideas for future episodes, ideas for topics for us to discuss, put into the comments and make sure you continue to follow our episodes. Thanks for watching this episode. Take care and bye for now.
See you later.